it's time for the MF Corner on the show. And today we're going to put the spotlight on tax planning funds, for early birds who want to start planning for taxes already. Let's chat with Dhirendra Kumar, CEO of Value Research, to find out what should be the ideal way to go about this. Hi Dhirendra, what are the options before investors to save tax in the most efficient manner? Do you think ELSS mutual funds continue to be a good idea because we still don't have much clarity on the DTC?
Yes, in fact, there is a status quo on the tax provisions for individuals when it comes to tax saving investment. In fact, there is greater clarity in terms of Rajiv Gandhi equity scheme, which is an add-on, so to say. Broadly speaking, three kind of tax saving options that you have. One is fixed income, the PPF, NSC bank deposits. They carry higher lock-in. The income is taxable, though the investment that you make is a deductible, income. ELSS is the only one where when you invest, it is deducted. It is a deductible income. Besides that, all the appreciation, because it is equity, all the appreciation is also tax-free. So for a lot of investors, Indian investors are heavily tilted to fixed income. Tax-saving funds makes eminent sense, and any market-related investment, it is a bad idea to be waiting for the last moment, and you run the risk of catching a market peak if you wait for March 2014 to make your investment. So get started with your SIP, choose a tax-saving fund, and invest over the next 12 months.
Dhirendra, so which funds in this category would you recommend and why?
The fund which I like is primarily, a quantum tax saving fund. I like simply because, everything else being equal, it costs half as much, and it has been a reasonably performing fund. In fact, a reasonably well-performing fund. And when choosing an equity fund, one should look at sustained performance through a full market cycle. One should be a little more careful with this tax saving fund because once you invest, you can't do anything about it for next 3 years. So funds with credible history, there are quite a few. But the ones which I like right now is, ICICI Prudential Tax Plan or the Canara Robeco Tax Saving Fund. And they look fairly impressive.
All right, I think we've got time to step in one viewer query, and it's from Anil Arora. He wants to know, how can one invest in funds available abroad? Is it possible, and how does one go about doing it?
Today it is possible for Indian investors to be investing abroad, but you don't have to go and choose a fund internationally. You have domestic fund companies which offer you a wide array of funds to choose from, and that is, broadly there are three kinds. One is specific geographic focus, so you have a China fund or a US fund. So funds which focus on a specific geography. Then there are thematic funds, Latin America, real estate or something like that, or some broader geography too. So I would say that, when investing internationally, choose a diversified vehicle.